Welcome back, you're with AM. Good to have your company. Developments are popping up all over the place to help tackle the nation's housing shortage, but how do these developments impact the housing market and homeowners trying to sell? Joining us now to explain where the market is at, thanks to our partners Property Apprentice, owner and financial advisor Debbie Roberts. Good morning, Debbie.
Good morning.
So are we seeing more of these developments? First of all, is there more of a supply?
So it's an interesting market that we're in at the moment because we went through a building boom and developers were getting a lot of properties under contract at that time. Now they're starting to get finished. New consents being applied has decreased. Okay, so what we're seeing is that there's less new building work getting done. Certainly any tradies out there at the moment are feeling the pain.
Yeah.
A lot of tradies have been laid off because work is reduced. So yeah, there's a common theme at the moment that all they need to do is try and survive until 2025.
Does that mean that in terms of selling it, if you're up against developments, that, well, there's, I guess, the competition has gone down?
Well, I mean, we're not seeing that yet. What we're seeing at the moment is that there's a lot of listings on the market. Listings have increased by 34.9% over the last 12 months. So some of those are developments that have just finished. Others are properties that have just recently been listed for sale. Stock levels are up 18.1% year on year. And so a lot more choice in the property market, and first home buyers are taking full advantage of that, which is great because they're making up the largest chunk of the buyers in the market at the moment, with what, 26% of all properties purchased in Q1 this year going to first home buyers, compared to the long-term average of 21% for first home buyers.
Wow. What do developers favour at the moment in terms of developments?
Whoever's going to
sorry, not
pay
developers, I mean investors, I should say.
Yeah, so developers, we're starting to see more developers doing dual key properties, or, you know, the types of properties that are double income, so townhouses on one section, that sort of thing. So that can appeal to investors more. So yeah, we're in an interesting phase. It's perfectly normal for this stage of the property cycle. This is literally what we call a buyer's market, but like I always say, the irony of a buyer's market is that there's hardly any buyers in the market.
Which is why it's a buyer's market.
Yeah, exactly. So it's a great time to be out there buying because there's less competition from other buyers. The market is pretty flat, so you don't have to panic buy. You know, there's opportunities are out there for investors as well as home buyers.
Do you think the increase in construction costs is having an impact on the number of developments around?
I think, no, I think it's actually developers try and build when there's demand for people to buy them.
Right.
You know, so with demand dropping because interest rates are still above average, then the demand's not there. So a lot of developers, even the big developers, a lot of them have said we're not starting any new projects until all of our existing ones have finished.
Right.
So yeah, so there will be probably a bit more of a slowdown in the number of new builds that are coming to the market because we're sort of tapering off now with the ones that were already in the pipeline, and like I said, new consents is decreased. So, but plenty of opportunity out there for buyers.
Thank you very much. That is Debbie Roberts, Property Apprentice owner and financial advisor, and that was thanks to our partners at Property Apprentice.